Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Seiwan, professor of economics at Ewha Womans University. Professor Kim, thank you for coming on today.
Good afternoon, Devin.
So as we just heard, Korea's current account surplus was positive there for the second month in a row in June. The surplus, though, for the first half of the year is the smallest since 2012. Tell us a bit more about those figures and what you make of them.
The first half of this year, Korea trade surplus, which is the gap between export and import, shrank down to the lowest level in 8 years. As we know, it is mostly due to coronavirus pandemic shock to global trading. Particularly, export decreased by about 13% in the first half compared to that of last year's, as major export items like automobiles and petrochemical exports were hit hard by pandemic. But since service deficit is improving quickly as Korean citizens less travel foreign countries, and export to China is also recovering fast, Korea economy will maintain positive trade surplus by the end of the year.
Well, you mentioned cars, and Korean car makers are still going through a rough time because of this decline in exports. Combined last month, their sales domestically and overseas were down 9.2%. What's your outlook on the auto industry?
There's no question that the hardest hit industries by pandemic is automobile and related industries like auto parts. According to Government Statistics Office, automobile production decreased by 20% in the first half of this year. But good news is that Hyundai Motor sale in the U.S., which is the largest market for Hyundai Motor, increased in July for the first time in 9 months despite pandemic. And also, Hyundai Motor's sister company, Kia sales, were only slightly down by 1.7%. Actually, all these figures are great improvements compared to two-digit plunges in previous months. As U.S. and European market reopen, auto export will be slowly recovered by the end of year.
Well, now turning to stocks for a minute, Wall Street closed higher yet again on Wednesday. The Nasdaq surging to another all-time high, third one in a row. What's the story in the global markets?
Dow Jones Industrial increased by impressive 1.4% on Wednesday due to U.S. Congress and government's further discussions on additional fiscal stimulus. This positive impact spreads to European markets over London, Frankfurt, and Paris markets, and all markets gained between 0.5% to 1.1% on daily basis. But Asian markets all decreased today as further concerns on deepening recession dominates the market.
Right. Asian markets, with the exception of Korea, because stocks surged ahead here too. The Kospi closed yesterday at almost a 2-year high, and then today added another 1.3%. Tell us about the local markets.
Yes, as you said, Evan, Kospi today increased up to 2,300 level with 1.5% gain in a day. It is the highest level in 2.5 years, and the market expects there still is momentum for further boom of the market. But at the same time, there is growing concerns that stock market shows signs of overheating because real sector is still suffering from serious low performances these days. And at the same time, Kosdaq also gained 0.8% today.
Well, we're seeing a dramatic decline in the dollar index as the coronavirus continues to spread in the U.S. and the Fed keeps up its stimulus. The Korean won, therefore, has come down quite a bit against the dollar in the past few weeks. What do you see happening with the exchange rate?
Yes, this is very unusual situation because even with a limited supply of the U.S. dollars by U.S. Fed, the value of relative value of U.S. dollar is not decreasing yet. That is related to many factors, but main factors are there still is a strong demand for dollar for hedging against the future uncertainties in global money market, and also Korean citizens active foreign investment and decreased export made Korean won weaker against U.S. dollars. So I expect that $1 exchange rate is expected to be moving around current 1,181 per dollar level without the sharp downturn.
Got it. All right, Professor Kim, we'll have to leave it there for today. Thanks so much for coming on.
Thank you very much.